look, like everything else, insurance has gone up. I mean,
Yeah.
it's a basically a reflection of the inflation we're seeing right now, and also the things that happen. Some people can't get it now.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
For homes right now here in Vegas, it's difficult for some people to even get it.
Yeah, no, absolutely. And that's kind of one of the biggest challenges that we've been going back and forth with a lot of our carriers is to try to come up with some consolidations so that individuals can continue, because lending requirements obviously have their strict, side of things. And so if they can't match what is needed, then there's no ability for the individual to actually buy the home. Some of our biggest challenges right now, and we're seeing it, is homes over 20 years.
Oh,
The average home in Vegas right now is 23 years old, and so we're kind of cresting that mark where more and more of our homes are becoming less desirable because of the losses that are being sustained from them. And so it starts to get a challenge. Majority of admitted carriers won't do homes over 20 years old right now.
isn't that? I mean, you think about Vegas is such a young city, so.
Right.
I mean, you live in Baltimore. I mean, there's no home that's not over 20 years old. I mean, it's crazy to me to think that 20 years is the benchmark for which they're concerned.
Well, and obviously, from an actuarial perspective, they're always going to go back to where the majority of the sustained loss is coming from.
Okay.
And for whatever reason, whether it's the minerals in our water are worse than other cities, but
that's
the
true.
plumbing and the piping at the 20-year mark, we see about a 42% rise in losses on those homes as they go from 20 to 30, and then a 60% increase from 30 to 40, and then 40 and above. There's essentially no one that'll do it.
Wow, that's really scary.
So where do people go to get insurance then?
To non-admitted markets, and so which we have plenty of opportunity to, but then now when we go from the debt to income ratio, now these individuals aren't able to qualify for
So
it.
I guess my question is, what's the difference between admitted and not admitted? Like the price variance, what would you see?
Well, so the easiest way to go ahead and give the difference is admitted markets have to submit to the Division of Insurance to actually get any approvals that they want to have changed, rate changes, deductible changes, whatever it might be. The non-standard or the not admitted market, they have the ability to make their own rules. So they don't have to submit for price changes. They can just go ahead and say, hey, water deductibles now $10,000. Or we want to have sublimits for water losses, and they can go ahead and implement those changes whenever they want.
Gotcha. So the insurance division has no control over those guys.
Not to say they have no control, but they don't have to get their approval for it.
Gotcha. Okay. Interesting.
Yeah. No, so it's tough. Now, so we're trying to fight a lot of different ways. For instance, like we've gone to market, and we've got the agreement. We actually set up a broker dealer with Cullen Water to where now we will have carriers that will accept homes over 20 years as long as those clients before sale agree to put a automatic water stop filter into their home.
Okay.
And so that allows for more clients to go ahead and fall within those lines. And we've gotten an agreement for them that they'll do it for $750 out the door for products plus service, which is normally a $2,000 installation.
Right.
And so that then opens up that market back for us to be able to go ahead and sell those individuals. Because I had far too many realtors that were reaching out to me for these homes that are 30 years old.
Right.
And the premium's coming back at $3,000-$4,000 no matter how much I put the deductible up to.
Oh, my.
And their debt to income ratio, they don't qualify for the home anymore.
Wow. That's crazy.
That's
yeah.
expensive.
I mean, yeah, it is. But I love that idea. So it's $750 fixed. Is that something we can share with our listeners?
Absolutely, yep.
So who was the company again?
Cullen Moen.
Cullen Moen. Okay, so here's what you can do, guys. We're going to have Liam maybe send us a link or get us some information. And if you want to reach out to us, we'll get you in touch with those guys. My house is 17 years old, so I'm getting close to the point where I'm going to probably have to do that. I might as well do it now.
Yeah, absolutely.
It'll save me money anyway. God forbid I have a leak.
I'm 37 years old.
Yeah.
And mine, so.
Yeah, so
Count down the days before that loss.
Oh my goodness! So so we got to do that.
I almost had one today. The water heater went.
Oh really?
Oh, in your house?
Yeah, but I caught it.
Thank goodness, right?
Yep.
Yeah, I know. We've got that little thing under our kitchen sink where it alerts us if there's a leak under the sink. That's all I've got. But but I love the idea that it'll stop.
No, the automatic shutoff is huge. And again, it's one of those that I always thought it was a thousands of dollar process to go through.
$750 is very reasonable.
Out the door and get it done before closing.